You might be thinking of getting into investing, but not sure if it's actually worth the learning curve. It can seem like a complicated, daunting, and time-consuming process. So will the potential effort needed to learn the skill actually warrant the amount of time you have to put into it? During this video, I'll be sharing my 2 investment portfolios for stocks and cryptocurrency. I'll be sharing some of the key lessons that I learned from my investing journey so far, and a lot of these are things that I wish I had known earlier. The majority of them were learned through personal experience, so if you want to learn from the mistakes that I'd made, make sure to stay tuned throughout the course of this video. Remember, if you find the content helpful, make sure to drop a like for the YouTube algorithm so that more people can watch this video. And just as a disclaimer, this is purely for entertainment purposes only. I'm not a licensed financial advisor, so always make sure to do your own research before making any investment. So jumping into my stock market portfolio, which I've previously covered in another video, but overall I've made roughly 4,400 New Zealand dollars from my stock market investments. Now, the majority of my portfolio was made up of Tesla, and I did make quite a good return from this. When I sold in early 2021, I had about $20,000 in there, and it was quite an emotional roller coaster for the time that I had the investment. Now, this is because all of my money was locked up in one business, and it was quite volatile at times. There were periods where it dropped over 30%, and this was quite difficult to look at because the amount of money that I had in there. I had virtually all my life savings invested into Tesla, but overall it did work out for me because I was able to come away with a fairly decent profit. Now, the reason that I sold my investment of Tesla is because I was trying to purchase a house last year. Thankfully, I was able to get into one, but I did miss out on the large pump that happened in late 2021. Now, unfortunately, after I'd sold in February of 2021, the price of Tesla went up 50%, and I had lost out on about a potential $10,000 profit. Now, overall, this was fine because I was able to get a house, and if I had held on to my Tesla investment, then I may have missed out on having enough for a house deposit. The price of Tesla was moving quite sideways and going through a lot of price changes through 2021, and even just a few percentage drops in the share price would have equated to thousands of dollars lost on my investment. Now, I could have tried to save that money and been chasing my tail to make sure I had enough for my house deposit, but it wasn't really worth it, so I had decided to sell quite early just to make sure I had those funds available. Now, the biggest takeaway that I can give you from this experience is that if you're investing money, it absolutely has to be funds that you don't immediately need, especially within a 6 to 12 month period. I virtually had no leadway for my investment to lose value. It either had to stay stagnant or increase in value for it to be viable to hold on to. Also, having all of your money in one company is not the most conventional investing advice. So most definitely, if you can spread out your money amongst at least 2 to 3 businesses, it can be a lot easier on you. When it comes to the stock market, it's all about a buy and hold strategy and spending time in the market rather than trying to time the perfect buying and selling points. And also, I'd say don't sell all of your investment at once. If you're confident in the business, it would be beneficial to not sell off all of your investment, maybe keep at least 25% in there, so if there are any increases in share price, then you can still reap those rewards instead of just looking at the stock graph thinking about what if I had just held a little bit of it. Because I did find myself doing that, especially when Tesla saw that pump near the end of 2021, thinking to myself, what if I held on? I would have made 14,500 instead of 4,000, but overall it's always a good learning experience, and I've taken away some more knowledge from it. So it definitely has its silver lining, and hindsight is always 20/20. So you just have to learn from these kinds of experiences and just make sure to not make the same mistakes in the future. Now, moving on to my cryptocurrency portfolio, which is valued at about 7,200 New Zealand dollars, and overall I've invested about $5,600, so that gives me a net profit of 1,600 New Zealand dollars. And just a few months ago, my portfolio was sitting at about $11,000 total, so I was up about 5.5K, and I'm just bringing that up to highlight the volatility of cryptocurrency. Price changes are much more dramatic than conventional stocks, so it's definitely something to keep in mind if you're looking into cryptocurrency. The highs are a lot bigger, but also the drops in price can be a lot more exciting as well. In terms of my portfolio, I've got the majority in Solana, then Ethereum, Ethereum, Atom, BTC, and then a little bit in Cardano as well. So the wallet that I'm using is Exodus and the Trezor Model T. In terms of my selection of cryptocurrency, I do stick to the more established ones, those that are sitting in the top 10 category. I don't really branch out of this. And in terms of all my purchases, the exchange that I use is Easy Crypto because I'm living in New Zealand. So with cryptocurrency, it was making me a fair bit of money in terms of the return, but I was really buying in during a bull market, and now it's definitely seen quite a big drop with Bitcoin having fallen about 30%. And since Bitcoin is the anchor for the crypto market, it has affected the price of all the other altcoins in my portfolio. So with cryptocurrency, the main thing that I would take away from it is that it's a very, very volatile investment, but it is most definitely worth it as well. If you're comfortable with these price changes and you're in it for the long term, it's fine. I'm not stressed at all about the drop in the value of my portfolio. I don't have any plans to sell these investments, and I don't need the money anytime in the future. I'm thinking I'm going to hold these for at least a good 5 to 10 years and just keep dollar cost averaging into them. And I'll be adding a few other cryptocurrencies into the portfolio as well. The volatility from crypto really does come from how small the market cap is of the coins. Even something like Bitcoin, which is close to $1 trillion in value. If you look at the market cap for the top 10 cryptocurrencies in comparison to the market cap of the top 10 biggest companies, the cryptocurrencies are much smaller, sitting in the tens of billions or potentially hundreds of billions when you're looking at Ethereum and Bitcoin, but those are the only two, whereas all of the top 10 biggest companies in the world are sitting easily in the trillions. So it takes much less money to move the price of cryptocurrencies because overall their value is much smaller, so you see that increased volatility. So overall, I've made about $6,000 between my stock market and cryptocurrency portfolio. If I held on to my Tesla investments, I would have been up an extra $10,000. So my total return would have been about 16,000 New Zealand dollars. Now, of course, you can't think like that when it comes to investing. And if you get into it, you're always going to have a story like that saying, if I had bought into a company X at this time or sold at this point, I would have made so much money, or I would have made an extra few $1,000s. But that's not the right way to look at investing, and you have to be positive about the whole experience. And if you're not someone that's comfortable with the volatility or seeing your money go through these massive price changes, then there's a strategy that's a very routine method which doesn't require any prior knowledge on the stock market or experience on the investor's part. Then check out this video on screen to give you a complete breakdown of this investing strategy, which is recommended for the majority of new investors.